Hi friends, my name is Bharath Chandra. The RBI's Monetary Policy Committee made a surprise rate cut of 0.5% instead of the 0.25% rate cut which was expected. This was done to support economic growth since inflation is already at a multi-year low and hence there is no immediate risk of rising interest rates. RBI also slashed the cash reserve ratio by 1% to further provide liquidity. This is likely to provide 2.5 lakh crore in liquidity for the banking system in the coming months. The stock market reacted positively to the RBI move. The Nifty 50 index reclaimed 25,000 level. We need to see if the positive sentiment can be sustained since in the previous few times Nifty faced a psychological resistance at 25,000 level. When the RBI cuts interest rates, it means that commercial banks such as HDFC Bank, SBI, ICICI, etc. will need to pay lower interest to borrow funds from RBI. When this happens, banks can lower interest rates on loans given by them to individuals and companies. When loans are cheap, more people are encouraged to take loans since they are confident of paying the EMIs and also higher savings for people and higher profits for companies. This will lead to higher demand for goods and services. This is the intention of RBI cutting interest rates in the economy. When interest rates are cut, stock markets are positively impacted since companies which have huge amounts of loans will need to pay lesser interest and hence their profits will rise. When the profit of companies rises, the stock price also will rise in due time. The following are the sectors which are likely to be positively impacted when RBI cuts interest rates. Number 1. Banking and finance sector stocks. When interest rates are cut, profitability of banks improves since cost of borrowing reduces. Hence, various banks and NBFCs rallied well today after many days. Point number 2. Real estate sector stocks. Majority of the real estate properties bought are with the help of loans. If interest rates are not hiked or they are cut, new purchase of properties may become easier. Hence, the sale of flats and other properties could rise in the coming months. This will have a positive impact on the real estate sector and hence the real estate stocks. Point number 3. Automobile sector stocks. Another sector in which customers usually take loans to purchase products are cars and two-wheelers. Most people take some amount of loans to buy their dream vehicle. So RBI cutting interest rates is a positive for this sector as well. For the sake of learning, observe the stocks of the above three sectors which are called rate sensitive stocks. Market has rallied due to the RBI announcement as well as good GDP growth and low inflation. Let us wait and see if the positive sentiment in our markets continues in the coming days as well. If you like this video, please click the like button and mention in the comment section, do you think markets can rally to 26,000 mark this time without falling significantly below 25,000 mark? If yes, type yes in the comment section, otherwise type no. Thank you for watching this video. Bye bye and all the best.